Hello, everyone. This is Dan Veru from Palisade Capital Management. When I last spoke to you on August 7th, we were only 2 days past the sharp sell-off on August 5th. As I discussed back then, I felt that the market had overreacted to some technical selling triggered by short-term macro events. I continue to believe that the economy is in good shape. It's slowing, but it's not slow, or heading into a recession. The bigger news occurred on Friday, August 23rd, when Federal Reserve Chair Jerome Powell clearly stated that the time has come for policy to adjust, leaving little doubt that interest rates will be lowered at the next FOMC meeting on September 17th. Stocks have begun to price in a rate cut cycle, and it's interesting to note that investors believe that the Federal Reserve may have engineered the coveted soft landing for the economy. Banks are an excellent barometer of the health of the U.S. economy. Since the August 5th bottom, the stocks of money center banks are up about 10%, and the regional banks are up even stronger at 13%. It's also interesting to note that the regional bank index has actually outperformed the NASDAQ over that period of time, which is up roughly around 8%. We continue to believe that the economic conditions today support profitable, attractively valued stocks. This is why the market is broadening out beyond the largest cap technology leaders. The bar for revenue and earnings growth for those companies seems very high. We will have some further clues on the direction of technology when NVIDIA reports later today. We believe that the best longer-term opportunities will be in small and smid-cap stocks, where valuations of profitable companies are much more reasonable. The recent rebound for both the Russell 2000 and the Russell 2500 index has been in line with the larger cap equity indexes. In the short run, we may see some weakness for equities. September and October are often the time of the year when stocks trade lower. The upcoming Fed meeting on September 17th will be closely watched. Yes, interest rates will begin to come down, but what will be the pace or magnitude of the reduction of interest rates? Will they lower by 25 basis points or 50 basis points? Will the market be disappointed with only 25 basis points or have growth concerns if it's 50? We're also entering the period when investors will be focusing on the presidential election. No doubt this is going to be an extremely close election with two candidates that have very different visions for the country and contrasting policy initiatives. In September, we will share our thoughts on the different policies of the two candidates and the potential impact on various sectors of the economy. In our opinion, any broad sell-off in small and mid-cap stocks is a buying opportunity. We continue to believe the economic landscape, direction of interest rates, and longer-term factors such as reshoring of supply chains to the United States are all part of the secular leadership shift from large cap dominance to small mid cap stocks leading returns. Enjoy the rest of the summer, and we look forward to updating you further in September. Thank you very much.
The information contained in this webcast reflects the views of Palisade Capital Management as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.